Yes, the idea is to try to put on the table in discussion a macroeconomic analysis on where we know in Portugal, as we understand that it could be extremely useful to understand the prospects for the real estate market. A good starting point was to understand what we can expect from the performance in the macroeconomic in Portugal. So let me first of all introduce my colleagues and friends. First, we have Ana Paula Serra. She's member of the board in the central bank in Portugal, Bank of Portugal. And we have also José Brandao de Brito. He's chief economist and head of externality and crypto assets in Millennium BCP. Thank you very much for staying here with us. So the question would be exactly where we know, because recently this month, September, we'd like to ask you some general views, and later we can move on particular issues, but as an approach of the economic or macroeconomic outlook for Portugal in 2021 and 2022. Recently, we have the news from the CFP, the Conselho de Finanças Públicas, the Portuguese Public Finances Council, which has improved the economic forecast for Portugal in 4.7 and 5.1 in 2021 and 22. So that means that the poverty or the loss of wealth because the COVID will be recovered in 2022. No? So well, I know that the Bank of Portugal, Ana Paula, has more or less aligned with this kind of prospects. Which is how do you see this kind of this forecast made by the CFP, Anna?
Thank you. We'll have our. Let me say before and I'm happy to be here and thank you for the invitation. And also say that we will have published our projections, October projection next week, so I won't be saying anything about that. So hopefully my words won't reveal much about what will be coming. But anyhow, I think most of us are well aware that in fact the second half revealed positive news. And so I think this is the basis for the projections that you just mentioned. So overall, maybe if you then go to see exactly what were the drivers of those good news, there were some changes in the sense that you had private consumption evolving very positively and maybe not so much what you would expect in terms of exports, given all that we know about all these supply chain limitations and bottlenecks that we've been observing. But overall, I think on my side, I share the views that this year will be close to what has been announced, and the forecasts that we have for the EU are not that dissimilar to what we have here in Portugal, and also the ECB that published its own projections in September. So as we see it is that 2021 will be a very positive year, and of course 2022 also.
Thank you, Miguel, and thank you for the invitation. Antonio, thank you for having me. Well, we have been at Milan BCP quite optimistic since, I would say, May last year, when we all realized that this pandemic would not as severe as the most pessimistic forecasts that were going around. And so we have been quite optimistic, and Dominic made a very good job showing that the nature of this crisis is completely different from previous crises, and you saw a much heavier and deeper collapse, but a much faster recovery. And there are lots of reasons to explain this. The first of all is the paradigm shift in the policy response, okay, vis-à-vis the previous crisis. Now, if you look at any graphs showing how the ECB responded, for example, or the Federal Reserve, in terms of the monetary stimulus, it went completely, crazy, and was like this wall of money coming into the economy. Also, there was this big innovation by which the fiscal policy entered the policy mix. And so there was these injections of money into corporations and households, and that withheld the purchasing power of people and kept the treasury of most corporations afloat. Okay, and so that meant that the collapse in activity didn't have a parallel in terms of income and income of households and the cash flows of companies, because if the cash flows, if normal organic cash flows disappeared, then there were the government substitutes. So in a sense, this allowed for this very fast recovery. And when you look at Portugal, for example, I would say, and there were these tragic forecasts for Portugal in the beginning of the pandemic because of the weight of tourism. And you see that Portugal Portugal and Spain and Italy and Greece and also France, which are countries in which tourism has a big bearing, they collapsed. I mean, activity fell not much more than the average. And in the case of Portugal, for example, I guess that the moratoria, which was basically that idea that people don't have to, they can stop or pause paying back their credit installments to the bank, that injected a lot of money into the economy. And so that's why we have like consumption recovering in Portugal very fast. And also, I guess the trajectory is quite happy. So just in a nutshell, by November last year, we set our forecast for 2021 at 5.2%. We are very confident with this forecast, and we think that 2022 will be in the neighborhood of this figure as well.
It's good to know. And Anna, coming back to you, with this optimistic approach, of this optimistic forecast, do you see from the central bank in Portugal a kind of, in the model of economic growth, a change in the cycle? Do you expect something in the expected growth for Portugal, something different from the past? And by the way, being member of the board of the Bank of Portugal, how concerned are you about this, information about inflation through Europe? And do you think it's something, I guess, that will impact in all central banks? What's your opinion about it?
Okay, so let me come back to the words of José, in the sense that, of course, all these movements that we observe in 2021 maybe will be somehow continued in 2022. Given, as I stress, the private consumption behavior, and what we expect is going to happen in terms of the savings that we observed over these precautionary savings, and also the moratoria and other type of fiscal measures that allowed people to save more. I think this will continue in 2022. I don't see nothing in Portugal that is very different from what we observe overall. We know there are differences that are much more driven by our specialization, and José has mentioned that, and so not all sectors will be recovering, and given that we wait more on tourism, and that, of course, will shape the way that we recover. Having said that, I think in general we have the same obstacles and we have the same drivers in terms of what will happen in the future. So in terms, for instance, of the fiscal measures, and even in terms of the monetary policy, what we have, and the markets also believe in that, is that this will be very gradual in terms of looking at what information is, and if the economy is recovering, then very gradually you'll be observing the unwinding of those measures. In terms of monetary policy, it's well known here that in the euro area, of course, this will be very accommodative. And you see Christine Lagarde repeating time after time the speech that we will be looking at the data, and as long as the data shows that we need to be here supporting the economy, creating very good funding conditions, we will be doing so. in terms of the inflation, that's of course where central banks are always looking at to define monetary policy, even if it is defined in a much broader way. And of course, I'm not going to that now. Our reading is, of course, these are temporary factors. So from what we can see with the data that we have so far, we see it as temporary factors. And so, having said that, so we don't see that we will meet our 2% target in the next year. And so there will be reasons for all this easing and all these conditions to continue and help on the fiscal side, of course, and then on the monetary side. Finally, on the supervisory side, but I think that was also very important in the sense that banks were allowed to operate in a more easy way in sense of in terms of capital ratios, and that's also been repeated that this easing will be up to the end of 2022. I think this is really important because banks were not kind of creating this feedback loop in terms of being part of the problem, but they've been able to be part of the solution.
Yeah, that's fine. That sounds good. And Jose, you already mentioned this the response to this crisis compared with the former one in 2008. In the past, we used exclusively monetary policies responses. Now, with the next generation European Union funds and all around, in the European Union side, we have copied, in a way, other experiences in the US and in other places. So, which is your expectation of how this monetary policy and therefore later this fiscal policy will have you measure which can be the impact in the in the aggregated data on the Portuguese economy, in particular in the real estate sector? How do you think? What do you think about it?
Okay, thank you. I think it's a very crucial question because a lot has changed since the last crisis, and one of the things that have changed is the tolerance towards social problems and unemployment. So you know very well, they had like around 50% youth unemployment in Spain. That's something that is completely intolerable by today's standards. I'm not judging, so but what I'm saying is that the political paradigm also shifted there, and so we know that monetary policy accomplishes to do a lot of things, a lot of positive things, but one consequence, in my opinion, is that it creates asset inflation. It's very easy to verify. Fortunately, also in the real estate segment. But financial assets, that increases inequality. So that's why, for example, when we look at the real estate sector, everyone's talking about affordable housing because monetary policy drives prices up, but then that prices out a lot of the middle class. So you have to have some schemes to allow people to live in their own places. So I think that the mix has forever or has fundamentally changed towards monetary policy and fiscal policy. That will create inflation, and so that's I beg to differ with my panel colleague, but I guess that's inflation, not high inflation, but inflation as a more permanent nature, because of this fiscal policy, the fact that fiscal policy has been brought into the mix. So every time there's a cyclical downturn, monetary policy and now also fiscal will intervene. That will bring about inflation, which is, of course, very positive for the real estate sector, especially in a context in which monetary policy and central banks, they have chosen to err on the accommodative side. So if risks are balanced, monetary policy will be more under-restrictive or more accommodative, which means that probably real interest rates will stay negative or very low. And that's one of the major drivers, macro drivers of the real estate sector.
I see.
May I add to that?
Sure.
So, in the sense that, of course, we, as if we see inflation as growing, I think this will be a positive. This will be positive news. And again, if we have the data, and then we can immediately react on that data. So, I think that's one aspect that we need to take in consideration. It's not that. So far, we don't see it. And another aspect in terms of the impact on real estate, of course, on real estate prices. And we see, we see this link, and we know that there could be some imbalances in some countries, not every other country, but in some countries we can see some imbalances. Not sure, let me put it like that, I don't agree that monetary policy should solve that. I think there are other instruments that the central bank has in terms of macroprudential policy, for example, countercyclical buffers, that will try to address that if this is only something very specific to a certain country or to a certain industry such as real estate.
Yeah, yes, thank you, Anna. One question I would like to raise to you is, we mentioned with this fiscal policy and the opportunity that the European funds might represent for a change of the economic model. No, this is, I think, in Spain we had a debate. Probably in Portugal you also have it. This dependence on tourism sector in Spain more or less represents 10% of the GDP, indirectly probably 12 or 14%. So this is a kind of addiction, and not easy to change 1 year to another year. At least let me explain you the experience that we have in Spain. That these next generation European funds are supposed to be a driver to change this model. What do you think this is? I would like to ask both of you. This fiscal policy from the European Union might be or not a driver for a better diversification of the GDP in Portugal? Anna, how do you see it?
I'm not sure if that means necessarily a diversification of the specialization model. And truly, as I see it, is up to investors and to decide where the opportunity are. And that question I can address it to the audience in the sense that, and that this is related with resource and capital allocation. People have to see if where the opportunity are, where value creation is. Of course, all these fiscal policies is much more, as I see it, about all this transformation on digital, on this transformation, of course, as you mentioned, on sustainability. And that doesn't mean that you're going to say that you have to drive resources from tourism to other resources. I think the pandemic didn't, at least in my view, didn't change that structural view that countries such as Portugal and Spain do have a competitive advantage in terms of those sectors. Of course, then what you have to think is what changed, what were the changes? So our keynote speaker told us about some of the changes and some of the risks that maybe you didn't notice that they were there, and now they are coming strongly. All these climate change effects, risks that you have, of course, that do not necessarily only affect tourism, but also affect tourism. And so I think part of the job will be to identify those risks and try to mitigate those risks, try to manage those risks, and there I think the fiscal policy can help in the sense that not only setting regulation, but also establishing conditions that will help then the overall, all the economic actors to somehow make those choices. Fiscal policy can, in that sense, create incentives to invest more here or in one sector rather than the other. But I wouldn't say like, let's simply disregard tourism because, as I see it, people will keep on thinking this is a very important part of their lives, because tourism is part of our lives. Yeah. We like to travel, we like to go to places, and so this is not something that is going away.
For sure. You say, how do you feel?
I totally agree, even because when the Portuguese economy is surprisingly diversified. Tourism, which is one of the biggest sectors in the Portuguese economy, has a weight of 8.4%. Had a weight before the crisis of 8.4%. It's now at 3.9%, according to the latest data. So you see that the biggest sector accounts for less than 10%. And if you look at exports, the goods exports are also quite diversified. The only thing that we have is big dependence on the Spanish market. But that's the only outlier, which is okay. But so completely in agreement with Nepal. But I would like to say that this program, this Recovery and Resilience Plan, is quite important on another level, which is we are worldwide on the verge of these concurrent disruptions, technological disruptions. Roger mentioned drones and blockchain. Those are like robotics and AI together. They are on the verge of changing the way we do things. Blockchain as well. On manufacturing, the 3D printing, which is additive manufacturing rather than the current model that we have. We also have in biology, and that's another very important thing in terms of, for me, one of the most interesting underlying trends is one of the longevity. Okay, so most of us don't realize that our kids will on average live well past 100 years. That will have profound impact. And so this program, this European Recovery and Resilience Plan, will enable a country like Portugal, which has underinvested in science and technology, to catch up and to equip itself for these very, very turbulent times in terms of changes in business models across the sectors, because this will cut across every sector. And so I guess this is going to be it could be, if well designed and implemented, it could be a very important piece in this moving puzzle.
That's understood. Okay, before I offer all of you, the floor to take the micro and raise questions to our speakers, before that, and I encourage you to do it. But before that, and given, excuse me, for my budgetary past, I can avoid to ask you about how you see this, this process for the politics in Portugal and in terms of impacting the budgetary issues. I think the public debt in Portugal is above 100% of the GDP. So I guess that even that this economic and stability pact, European field, has been suspended, for Portugal and for Spain and for the others. But I guess that in 2023, the path to a budgetary adjustment will be required from the number of the partners in the European club. And what do you expect in this field? I mean, this growth in the GDP will ease this budgetary adjustment, given that your prospect for deficit is not bad, compared at least with the Spanish side. But in the Portugal field, how do you see it? Will be necessary to make adjustment, or maybe just the GDP growth will help to solve it in an easy manner? Anna?
It's a difficult question, and of course that's not up to the central bank to answer that question. Of course, we had this way before the pandemic that went very well, and so we were on the right way, and I think we can go back to that. Of course, growth will help, but I think we have to be very attentive to spending in the next few years. Otherwise, it would be difficult to get back to the track to the very positive track that we had over the last 3 or 4 years. I think this is not. I think most the people that it doesn't make doesn't make a difference if it is one party or the other. I think people are very aware that that's the way to go, and I think that's we even if even if it was not these last 2 years spoiled the good thing that we had. I think, at least what I follow in terms of the Minister for Finance, I think they have a the will is very similar to what we had in recent years, and I think that will be managed with the rigor.
Jose, what do you think?
Well, very fortunate to speak after Ana Paula, because she says the important stuff. I can just... well, I guess that one another important aspect would be this, if you want, the political argument at European level. I guess that, again, after the traumatic experiences of the last crisis, we won't have any crisis in Europe anymore, and especially after Brexit. Okay, and so I would say that that effort, that fiscal responsibility stance will be required, but will be asked kindly, and will be more about diplomacy, because if there is any downturn, that will be covered by the newly found, if you want, pan-European fiscal instruments. So I would say that prudence will continue to be, in fiscal terms, it will continue to be the name of the game. But any country or any set of countries that experience cyclical trouble, there will be more and more instruments to cover those kind of cyclical downturns. And I guess that's another game changer, because Europe has to stay together as the point of greatest gravity is shifting from the Atlantic, or has already shifted from the Atlantic to the Pacific. So I guess the new geopolitical puzzle, or the unfolding geopolitical puzzle, will guarantee that Europe will stay closer and closer, despite all the headwinds and troubles.
Yes, it makes sense, and at the end of the day, it's true that this fiscal response is historical in the meaning of the first time in the life of the European Union project. No? So before we, I think we are a bit out of time in our scheduled agenda, and before we go into the World Cup, this is a way to interact with the audience and make a kind of test. And how do you feel about it? Before that, I would like to propose you, or to offer the floor, if you want to raise any question to the speakers, or just a comment about the topics already mentioned in this round table.
Hello. Hi. Can you hear me? Yes, you can. So the question is in relation to inflation. In the last years, we've seen low, let's call it CPI inflation, and high assets inflation. I see that your opinions about inflation going forward are different, but can you comment specifically on the CPI inflation and asset inflation going forward?
Yes, sir.
Thank you. Well, I guess that CPI inflation will be okay for the last 14 years. CPI inflation has been at or under the central bank's targets. Okay, and that's basically allowed central banks to pursue this extremely accommodative and expansionary monetary policy. Okay. Going forward, I think that inflation will be at or above central bank's targets, which means that those extremely accommodative and expansionary monetary policy won't be allowed. Okay, won't be implemented. And so I would say that the CPI inflation is on the up and asset inflation is on the downside. But this is overall. Having said that, there are segments of the investable assets that will do differently under higher inflation scenarios. Real estate, commodities, those are the kinds of macro sectors that tend to outperform during periods of mild to higher inflation, and stocks and of course bonds will typically do worse in the kind of scenario that I envisage.
Thank you for your answers and for the panel. It's more for Bank of Portugal, of course. If not, I will ask José at Business Home. How you see, or Bank of Portugal see the funds that are going to be introduced in the system, in the PRR for the sector?
We see them as very positively, as I think, as everybody, in the sense that these are, as has been mentioned, this is a way of helping the economy to grow and to transform and to face some of the new challenges, new risks that you have in the medium long term. So maybe you can elaborate more on that.
In this area, because as I see it, there's only two targets.
Say real estate in the real estate industry. Okay, in the real estate industry.
Is only for municipalities and for promoters if they do it sustainably new buildings. So it's a little bit street.
Yeah, I think that that's part of the transformation that I mentioned in general terms, and of course for the real estate industry in particular, I think it's important that that funds that are available are used for that specific purpose. I wouldn't expect. We also mention all these social issues that, of course, are very important, and I think that's what you mentioned, your second point. I think that's also a way to pay attention to those opportunities. So you have at least those two solutions that I'm sure will be important for the all the transformation of cities that will come with that will result from that would create opportunities for the sector. Yes.
Yes, I think we got another question over there.
Thank you very much. We are more concerned about after the pandemic, the real estate sector has evolved in a different direction. And especially for healthy houses, etc. And people are trying to shift to houses with balconies, with terraces, with gardens. And there is a big change in the consumption of the people. In that respect, what do you expect the real estate prices will evolve in terms of inflation? And it is driven by the cost of construction because of the commodity price increases post-pandemic. You know, the logistic prices and everything has so much complicated, and this will be reflected somehow into the first-hand sale of new residential, where people will feel the pinch of the prices, of the real prices. Is there a program to make people shift from their unhealthy houses to the more healthy stock?
Miguel, it's your turn.
No, please. Go ahead.
That's a difficult question.
You're the speaker. Feel free.
Okay, well, I'll answer to the part that inflation is everywhere. That's the definition of inflation. So inflation is in building materials, is in the cost of construction, and that will be of course a factor going further. Not necessarily a good one. Not for the people in this house or the investors or the buyers. But I guess that's something that has again occurred. Well, regarding the typology of houses, I'm not sure I got the question. I guess that everyone would like to live in a house with terrace and gardens, but not everyone can afford it. So I guess that the balance of the market won't be shifted, particularly by the pandemic. I guess that I guess that of course it's better to have a garden, and perhaps people spend more time at home with this remote work and stuff. But you still have the budget constraint, which is something economists like to talk about a lot. And I guess that will be maintained after the pandemic.
Yes, I think so.
Thank you for the feedback.
Thank you, Antonio.
Yes, we have 4 minutes left. Let me please end this roundtable with a World Cup. Thanks, Antonio. Yes, as I mentioned before, the idea as years before is to reinforce this interaction with you, with the audience. You can see the website worldclub.com/Editorial 2021, and then you can find this first test, this first question about your forecast on 2022. No, we suggest. I think you are already answering. The question one is an excellent year, robust economic growth above 2019 levels. Seems to be, hopefully. Let's see. Second option is so and so. Growth is there, but other constraints are still remaining. We return to 2019. And the third, the less optimistic, is a deception, slow growth, and far away from the levels of the year 2019. I think this, your opinion is more or less in the optimistic side, step by step. Let's wait a couple of minutes. But for the time being, important majority is 61% of EU, 63 are in, let's call a middle stage, no? So and so. And at least a third of you, however, 32%, are in the most optimistic answer, an excellent year. 70% is in the middle, changing. Let me thank you for the answer, because I see this is getting more and more answers. Let's wait 1 more minute, 1, 2 more minutes. Still we have time. And a small amount of people answering in the bad answer, I mean in the less optimistic one, in the third. Okay, I think we are about to end our scheduled time. Let me brief. No, it's still changing, but I think it's quite clear that in around 70%, 68, 69, 70% of you have the opinion of not very optimistic, not very pessimistic approach. Huh? It seems to be that you are confident in the growth, but thinking in the constraints that are still remaining on the landscape for the future. However, if you compare the 1 and 3, is much more important the weight of the optimistic side, with a 27% of you thinking in an excellent year for 2022. Okay, thank you very much. I think quite interesting this World Cup. Thanks to our speakers, quite interesting, very helpful. And thank you very much for helping us in understanding the Portuguese outlook. Thank you very much.
Obrigado. Bye-bye.
Thank you. Thank you.